In just 6 weeks, JP Morgan added 21 million ounces of physical silver. And at the same time, they did something just as important, yet far less discussed. Between June and October, JP Morgan repeatedly eliminated its entire 200 million ounce of paper shorts. Think about what that means, right? For years, decades even, JP Morgan was infamous for being one of the largest short sellers in the paper silver market. Futures, derivatives, synthetic supply, paper silver that came treated with a created with a keystroke. But now they're no longer short. They are long physical silver, and you could do that. And in my Patreon channel, I show you how to buy silver and 3 ETFs. And for the first time ever, they are long both physical and paper silver at the same time. Don't forget to give me some thumbs up and to subscribe, because I canvass the area to figure out for my subscribers, what else could happen. That is not normal. That is not neutral. That is a signal. So let's get very clear about something. JP Morgan does not make mistakes of this scale. They do not accumulate 750 million ounces of anything by accident. They do not flip from being the dominant short to the dominant holder unless the underlying market structure is breaking. And that brings us to the real issue. Silver is not just a precious metal. Silver is an industrial metal. It's not just jewelry. It sits at the intersection of energy, defense, technology, electrifications, AI hardware, medical systems. There is no energy transition without silver. There is no grid expansion without silver. There is no modern military hardware without silver. And unlike fiat currency, you cannot print it. Silver supply is tight. Mining output is stagnant. Grades are declining, and demand is rising from every direction at once, which means something very uncomfortable for the financial system. The paper silver market only works if physical supply is abundant. It's not. So here's the dirty secret of the silver market. For every ounce of physical silver, there are dozens, sometimes hundreds of paper claims, future contracts, ETFs, unallocated accounts, right? Most of it's leverage stacked on top of leverage. It works, right? Until someone demands delivery. That's exactly what happened in 2008 when I was trading credit default swaps. You could see what was going on. Right? Everybody's saying, well, you know what? I'm going to hedge. Give me protection of my loan or my bond on Lehman Brothers. Right? Can you write me protection? Protect me against a default? Yeah, sure. Everybody signed up. Because nobody thought that this was ever going to happen. But then it did happen, and then they realized we have to pay up now, and they couldn't pay up. Now imagine being JP Morgan. You see rising industrial standards. 2, geopolitical fragmentation. 3, energy security becoming national security. 4, central banks losing credibility. Again, that theme that keeps coming back. 5, inflation that won't die, right? Now I've been talking about that. Especially as they're lowering rates. And that's the reason why Treasury market is so much higher than the Fed fund rates. And a derivatives market built on confidence alone. Well, nobody's going to deliver all this. We're just going to trade the spreads. We don't actually want to deliver. So what do? Well, you get out of paper risk. You secure the real asset. You take delivery. And you do it before the crowd realizes what is happening. That's another piece that's being moved on the gigantic chessboard of financial security. And you do it before the crowd realizes what's happening. Ask yourself this. Why would the most sophisticated bank in the world abandon a massive paper short position unless the risk of being short was becoming existential? That they know no one is going to be able to deliver it. Paper shorts work when prices are capped. They fail when physical supply tightens. They explode when delivery matters. JP Morgan didn't just close their short, they reversed it. They didn't just hedge, they cornered supply. And when a systematically important bank does that, it tells you something profound about the system itself. They're no longer trusting price discovery, which is what the stock market does day in and day out. They are preparing for dislocation. Now let's zoom out. It's not just about silver. It's about monetary trust. The world is drowning in debt. Right? The world is drowning in debt. What does that mean? Well, it means we have too much debt. How long is that going to last? Well, right now we're not doing too good, but we shall see. Yields are unsustainable. Currencies are being weaponized. Trade is fragmenting, and inflation has re-entered the system structurally, not cyclically. Right? In that environment, physical assets matter again, not because of ideology, because of the math. Because when confidence erodes, claims are questioned, and physical ownership becomes king. Silver is small enough to be cornered, critical enough to matter, and undervalued enough that institutions can move quietly until they can't. JP Morgan moved early. Now, think about the asymmetry here, right? Retail investors argue about price targets. Traders argue about technical levels. But the banks like JP Morgan thinks in terms of system stress. They ask, what breaks if this asset is unavailable? What fails if delivery is demanded? What happens if confidence cracks? And when they don't like the answer, they don't debate it on television. They act, they accumulate, and they secure control. Did you hear anything about? I mean, you probably heard about the CEO of JP Morgan going around saying, no, we're in a recession, we're in a recession, we're in a recession, right? Of course, we're not in a recession. Well, what is he talking about? Well, maybe he's acting already. That is why this story matters. Not because silver will go up tomorrow, but because, not because of memes on the stock market, but because the structure of the market is changing. When the largest participant stops supplying paper silver and starts hoarding the physical silver, the game is changing. Liquidity dries up. Validity increases. So we have ourselves a system, a problem. And that's something you need to realize. So please be aware of that fact. Understand what is going on to make sure of it.